is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with Andrew Young. Andrew, one of the big ideas, one of the big memes that's been around in crypto for a very, very long time is this thing known as the flippening. And the flippening is this moment in time when Ethereum is supposed to get bigger than Bitcoin in market cap. You know, as the notion of a world computer gains traction and more assets are deployed on that network, it will eventually outscale Bitcoin. That has not happened. In fact, Ethereum has never gotten closer than it did back in like 2017, 2018 to being as big as Bitcoin. But now the flippening thesis is pivoted to Solana. Now Solana is the thing that's going to flip Ethereum. And Ethereum, is in trouble because this competitive layer one network is starting to make inroads. We talked a lot about that on the last call about how Ethereum is far from dead. In fact, if anything, it's looking stronger than ever. But now I've got a new flippening for you. This is the flippening where a new insurgent app and asset is going to grow larger than any other. And of course, I am talking about the juggernaut, Ripple, XRP. So, Andrew, when XRP flippening?
Yeah, it's interesting. We saw the first flippening, which was Ripple overtook Solana.
Yes.
To become the number 3 crypto asset. It's up 85% in the last 7 days. I think it's actually up like over 150% from it's like in the last 3 months. Yeah. It's gone. Oh, wow. Actually, sorry, I was way off. It's gone up since the start of November. It's up 400%. So
wow. It's the present value of its future cash flows must have increased quite a lot. What are the fundamental drivers contributing to the surge in the asset price?
Yeah, so there's a couple things. So the first thing was Ripple added this essentially EVM compatible smart contracts to this like side chain, essentially that's built on top of the like Ripple ledger.
Yeah.
And it's actually very smart. I would have thought they would have done this a long time ago, to be honest with you, just because Ripple has a huge community, ton of liquidity on the token. But there's really not much you can actually do. Like the underlying technology is up until now has been kind of I don't want to say useless, but very lightly used. They've had a couple of like corporate sort of partnerships that over the years have just kind of fizzled out. So we've heard lots of announcements about different banks that are going to use the XRP ledger for XYZ use case, and they haven't really gone anywhere, to be honest with you.
Yeah.
And then they sort of like fizzle out over time. This is a very low hanging fruit because everyone in crypto already knows XRP. It's already got a gigantic community, and if you add EVM smart contracts to a already huge community with distribution, you're going to get a lot of applications, you're going to get a lot of new tokens, and you're going to get like your own little DeFi ecosystem. And that's actually exactly what happened. We've seen like an explosion in meme coins, for example. There's like overnight
on Ripple?
On Ripple, yeah.
Oh.
Yeah, the meme.
Maybe I should be paying attention to this. I had a different view, but please continue.
No, so I mean, again, this is like what I'm seeing on the crypto native side. So there's two sides. So the first side is that for the first time, there's actually, there's like usable technology, at least for the crypto community.
Yeah.
Because up until now, it's just been this thing that, some corporates and some small banks have tried, and no one really knows what's going on. This is actually, like relatively vanilla in terms of technology, but it's something to do. It's like you're running back the traditional crypto playbook, but you're running it back on a huge community. So that's kind of step one. That also, in a way, adds a lot of, value to Ripple because now there's like clear revenue coming in. So that's number one. That's like the fundamental use case. Number two is it seems like every bull market we get a crazy spike in the price of Ripple. We've now seen it in like the last 3 bull markets, and it typically just goes up in a straight line over the course of like a week. That happened in 2021. It also happened multiple times in 2017. And I think part of it is just, it's kind of the sign that like retail is coming back to the crypto market. Because over the years, XRP has been kind of like, it's like to people in crypto, it's kind of seen as like a bit of a meme coin, to be honest with you. Like it's not really seen as like a serious thing. It's not seen as a serious thing. But to people who are outside of crypto, they see Ripple as the like buttoned up, this is the bank coin. Because that's Ripple has always been like, we're non-crypto, we're blockchain for banks, effectively. Like they're kind of like, their CEO wears suits, he looks like a normal corporate CEO. It's very much like this is supposed to be like the corporate coin or the bank coin. The cynical take is that it's a meme coin pretending to be a real use case, which in a lot of ways is like the greatest meme coin there is. That's actually a little bit, again, that's like the cynical take. What's interesting is now that they actually have their own like their own EVM chain, there's going to be more applications. In a lot of ways, they're kind of backfilling reality, and they're going to have their own dev ecosystem. So like that part, actually makes a lot of sense. A lot of people were bridging onto this sidechain over the last week to try out all these different things. But yeah, I think the more important thing is really this is clear sign that retail is coming back to the market, because the first thing retail does when they come back to the market is they say, I own a lot of XRP, I'm going to go buy this thing because it's only like $2, whereas Ethereum and Bitcoin are, $3,500 or $3,700 and $95,000. Like a lot of people also don't realize you can buy partial Bitcoins or partial ETH, right? Like they just think you have to buy whole coins.
Yeah.
So yeah, I guess those are the 2 reasons. I don't know. Do you see a third or?
No. I mean, I always thought it was sort of a meme coin of sorts, and one that had that reputation, earned or otherwise. I think maybe it's benefiting a little bit because, like, disproportionately with the election, because Ripple and XRP have been the subject of an SEC, inquiry. And a lot of platforms until recently didn't list XRP because of the legal limbo, like is it a security, isn't a security. That I believe was resolved in a court case. But I think that, if you're looking for like a Trump coin, I guess, that like benefits in a different regulatory regime, this one maybe has been held underwater, I guess, a little bit more by that. Though it's hard to say held underwater when it was already like worth $40 billion or $30 billion. Like, so I don't really know what to make of it, Andrew. My thesis on the, regulation sort of tailwind has been corroborated a little bit. Today we got news that the SEC, that Trump has announced who he'd like to be the SEC chair, a gentleman by the name of Paul Atkins, who was formerly a commissioner of the SEC. So not the commissioner, but one of the commissioners. And since then has had a private practice, including being an advisor to the Chamber of Digital Commerce, which, just a quick plug for people who are listening, on Thursday, December 12th, we're hosting Perry-Ann Boring, the CEO of the Chamber of Digital Commerce, along with Chris Giancarlo, the former chairman of the CFTC, for a webinar where we'll be discussing the 2025 crypto outlook and also what Trump means for the industry. So you want to tune in to that if you're listening to this live. Okay, back to what we were talking about. So today, this was announced, and then you started to see some of the stocks react positively, but there's one in particular that seems to be doing better, which is Galaxy Digital. And one of the reasons for that, I think, is that it's been in the queue to uplist from the Toronto Stock Exchange to the US. And that's been held down by the fact the SEC doesn't want any new listings until recently, because of the old administration. So you're starting to see like a an outperformance on like a SEC tailwind trade, and maybe XRP is in some way sort of benefiting from that. But beyond that, I'm not really sure. I wasn't totally aware that there was bridging to XRP happening and there was all this stuff. So that's kind of interesting. But yeah, other than that, I'm not totally sure. But on the topic
I think that's good. So the three reasons. So you got fundamental new tech, retail's coming back, and the regulatory environment, disproportionately benefits XRP. I think that's actually a pretty reasonable thing to think.
Yeah. Okay. Done. We've solved XRP. Moving on, Ethereum. So we've talked a lot about how this case against Ethereum seems to have kind of run out of steam. There's been this effort to say that Ethereum is, old technology, and that Solana and others are going to do things better, bigger, better, faster, what have you. And, I think that if the price action is any sign, I think people have kind of lost interest in that. We've seen that Ethereum has outperformed Solana by, I think, 20% since we basically started pounding the table. The last episode, Andrew, was called Dying on ETH Maxi Hill, which was in reference to your very memorable quote that you were going to die on ETH Maxi Hill. And so far, you're still alive. So tell us, what's been going on with Ethereum?
Honestly, not a huge amount. ETH's up 7.5%, I think, over the last week. It's actually down a little bit. It hit 3,700, so it's cooled off a little bit. And then Solana, I believe it's down about 3-4%. So it's actually we're actually only up about 12% on the pair trade since exact last week, just because ETH has sort of fallen a little bit. It's really early days. I think this is like a multi-year sort of risk reward in terms of, I think ETH has more, just in terms of risk reward over the next 2 years. I think ETH is the better play. Could easily be wrong. I think the big thing is, I just think there's going to be so many, in crypto, there's this hot ball of money. Right? There's just a hot ball of money that is constantly chasing returns. And it's for the most part, it's very much a mercenary capital. It's not really there for the long term. And I just think that hot ball of money, it went to Ethereum in 2017 because Ethereum was the home of ICOs. It went to, it kind of was across multiple different ecosystems in 2021. With NFTs and DeFi, and for the most part, it's been on Solana right now for meme coins, but I think we're starting to see the first signs that the hot ball of money is just going to keep rotating. I think it's going to, for the most part, it's going to stay on Solana, but the fact that something like XRP can kind of come out of nowhere and bootstrap its own ecosystem. Super early days there. Obviously, wouldn't think it's going to take a lot of mind share. I think base, like I said, hot ball of money will rotate there too. And so the problem is if you're a chain that's benefiting from the hot ball of money, what happens is your asset gets bid up a ton because your, in the case of Solana, Sol is effectively the casino chip that you have to use in order to actually, participate in meme coins. And so you have to buy, if you want to, you have to sell ETH to buy Sol to then buy meme coins, which you then, sell back into Sol. The problem is if the hot ball of money leaves your ecosystem, then just as you got a lot of buying demand for people to buy your native asset because it's the casino chip, you see the reverse happen where a lot of money sells your base asset to, buy SUI or whatever, or XRP. So it's a highly, highly reflexive, momentum-driven sort of use case. So I think Solana long-term is going to be the home of things like DPIN, things that need ultra high TPS. I think that's incredibly exciting. But right now, I think the price is sort of overly high just because of the effects of the hot ball of money. And I just think meme coins are a particularly extractive form of use case. There's going to be some winners that survive long term, but I honestly think there was a better hit rate with ICOs. And even though ICOs, a lot of them were scams, because at least then there was some capital going into going into building new applications and things like that. So, we'll see. I think it's too early to tell. I'm sure, obviously, at some point you'll see a lot of stuff go on Solana, and Sol will get bid up again. But I think, it's a game of rotating chairs. So, in some respects, we'll see.
Yeah, I'm with you.
I think one other thing I want to point out that's really interesting, which is actually making me a little bit bearish short term, is a lot of the cryptos that are doing the best right now are what are called Dino coins, because they're like dinosaur coins. A lot of them are actually from 2017 even. XRP is a good example. It's from before 2017. But we're also seeing assets.
I think it's like 2013.
Yeah, it might even be like 2014 actually. I have to check. A lot of things like that are ripping right now. Like Polkadot, which is a little bit later, is 2019. Though it did its ICO in 2017. It was up like almost 100% in the last 10 days as well. Filecoin, which is more of like a 2021, has been going up a lot. Chainlink, which was sort of like the darling of the 2017 market, I believe it's up almost 100% in the last. Let's see. It's up 40% in the last 7 days. So underperforming on a relative basis, but I just think like a lot of this is just kind of the rise of the Dino coins. Yeah, Chainlink's actually up 100%, 140% from the start of the month. So the reason why that's important is that's kind of a bad sign, to be honest with you.
Right.
The reason why I think it's a bad sign is that sort of indicates that retail, just mainstream retail, is flooding the market and sort of buying stuff that they've already owned, that they haven't been looking at for a long time, in many cases multiple years. And it also means that money is starting to get sort of thrown somewhat indiscriminately at projects. So, I mean, you could make that case. You could also make the case that it's just kind of like money's leaving meme coins to go into things that have somewhat real use cases. But I just think it's not a great sign for the longevity of this market, because it does. I wouldn't say that we're in the early stages of this bull market, put it that way. It's clear to me that we're we're in the second half of the bull market. We're kind of in the melt up. I think we're in this beginning of the melt up phase, if I was to kind of like pinpoint where we're at, which typically means we have like 6 to 12 months left. But I've also been getting a lot of calls from like different Bay Street people about crypto, which is, when you start getting a lot of calls from people outside of crypto about crypto, that's also kind of, a sign that we have maybe 6 to 12 months left. So we'll see. I mean, I think we're in the second half of this crypto run now. Maybe the early stages of the second half, but that's kind of my prediction.
The beginning of the end of the beginning of the end.
Yeah, the thing is the thing you have to keep in mind though is that historically with these crypto markets is that the second half is the crazy phase. So it's kind of like a simmer and then a boil. We're at the boil part, and then it's like a blow off, melt up craziness.
Right.
At least the last 2013, 2017, and 2021. That's how all of them went. That's only 3 markets to look at. But I think there's something about crypto that's just so reflexive, where more attention comes onto it, which then effectively increases the size of the communities, increases the awareness, increases effectively. Often you see a huge uptick in like the fundamentals because you have more users, so earnings go up as well. So there is something about crypto that is just so reflexive that leads to these blow off tops. And I think we're kind of in the early stages of that. I'm still very bullish. I just think we're starting to see the first kind of signs of first couple top signs.
Well, that's really interesting, Andrew. I don't think I've heard you articulate it quite that way. And we'll certainly be keeping an eye on things. I do remember the last time around, a bunch of things came back from the dead briefly. and there was a little bit of exit liquidity, and then they ended up, settling back in. I find your analysis to be both instructive and also somewhat nihilistic. Like the idea that, we're in the middle of the pump and it's going to be the boil over and it's all reflexive and there's all these people piling, but eventually, inevitably, it's just going to blow over and then, we'll be in another winter. And you're probably right about the price action, but we're not talking really about, you did mention fundamentals could improve, but, to me, it's always about like, well, obviously, like, you can make money in this space if you understand these dynamics, but like, what's the next sort of exciting thing that people are focused on building? And one of the things that I've been looking really closely at is the idea of like agentic AI and like on-chain agents, where basically, if you've got AI, it's going to need to like, make money for doing stuff, and it's not going to need a bank account. It's going to need a crypto wallet. And I think that is like the new thing that everyone's like so excited about. The idea that there will be way more AI agents, a potentially infinite number of AI agents. And if each of them has a crypto wallet, they're all transacting on chain. Well, that is like the super duper turbo bull case for crypto, right? Like if you own Sol, and as a holder of Sol, you're earning network fees as part of your staking yield. Then if every AI agent's doing stuff on Solana, there's going to be tons and tons of revenue, as you pointed out, fundamentals paid to the network, and you're going to benefit, right? So like you can participate in the AI revolution by owning a share of some of the most promising networks. And that's a pretty compelling thesis. But is it true? Is this spin, or is there real merit to it? Have you spent any time on this?
Yeah, so I think that's actually you're ahead of the curve on that. The fastest growing project in crypto right now, just in terms of like something that effectively didn't exist a month ago in the mainstream sort of crypto whatever mind share, is this platform called Virtuals Protocol.
Mindshare, yeah.
So Virtual Protocol, it's kind of come out of nowhere.
Jake is on the case. Jake, our associate. He's all over it, apparently.
Yeah.
Jake, there's Jake.
Yeah. So for some background, so Virtuals Protocol just 4 months ago was a $30 million market cap. Now it's 1.55 billion. And what it does is, Jake should have told us to buy it. I mean, why?
I'm just like Jake.
He screwed up.
He knows all about this thing. Where was the call?
Yeah, so Virtuals Protocol is really interesting. It allows you to
hear that.
Yeah, it's a crazy.
Disgusting.
Yeah, I mean, the thing is, one side note. You're in the second half of the bull market when projects that you looked at 3 months ago are up, 50x. That's a telltale sign. Yeah. But anyways, you can't hit them all. So essentially what Virtuals Protocol does is it lets you create your own tokenized AI agent, which then has its like own coin that people can speculate on. And I think this is probably, if there was kind of like a potential narrative that could steal mindshare away from meme coins, it's probably something like this, because it's incredibly new and it's kind of cool, to be honest with you. Like you're investing in like effectively like an AI run company is kind of the way to think about it, because these things can control wallets, they create content. I mean, it's very, very early days. I think the biggest one right now, the biggest market cap now one is 280 million. That's actually way higher than I thought. Though those things have just been growing quite a bit. It's only managing $4 million though. So it's a bit overvalued by traditional metrics. This thing's really interesting. It's very, very futuristic. Create your own AI agent, which then effectively runs its own pool of capital. It creates content as well, builds a community, and Virtuals Protocol makes it really easy to create and launch relatively fast. So,
what is it using exactly? like, how does that work? You're launching an AI agent.
I'm honestly
Like, I'd love to know, like, what AI agent is it on chat? Is it GPT-4?
I don't know. I don't know what LLM. Actually, that would be a good question for Jake. I don't know if he.
Jake, get to the bottom of it.
Yeah, maybe that's for a later episode. I'll reach out to the founder and see if we can get him on the pod, because I think that is it's pretty interesting, and it makes it a little, like, one of the issues with it, I guess, is meme coins, they're in effect complete, not vaporware, because there was never anything even promised, but there is truly nothing attached to it.
Yeah.
There's no fundamental value whatsoever. It's just pure sort of narrative. The thing with these is they actually can have like an underlying revenue generating business.
Yeah.
So that might limit their growth a little bit because there's no, at least no bull market. But for me and for you, like for boomers, it's something that we can actually sink our teeth into a little bit. It's just also just like an interesting, on-chain AI agents that run their own pool of capital and essentially try to generate returns. It's like,
remember we talked to Leo Mindyuk from ML Tech, and he had like basically this platform. So their platform is basically all these strategists on this platform. You can put money to work in one of these different strategies. They have like read access to like your Binance account, and can trade on your behalf or whatever. I feel like there's like a massively scalable AI version of that where like you can basically have like AI agents running your money for you, and like test between hundreds of thousands or hundreds of thousands of different strategies and strategists, and like build a portfolio of different ones where they're uncorrelated and create like a portfolio mix or something. I don't know. There's so much there to like really unpack. And I often think like, I often think that people get really excited about this stuff, but it takes longer for this to develop. But the long-term vision is pretty interesting.
Yeah, and that's actually exactly what these things do.
Right.
So the number one sort of AI agent, it tracks CT, so crypto Twitter discussions, and leverages its proprietary engine to identify high momentum plays. And then essentially, if you buy the token, you get access to its analytics as well. So it's incredibly early days on this type of thing. It is built on Base, which I thought was interesting as well. Sort of, sets Base up well if this becomes like one of the next big narratives. And obviously Coinbase sets Coinbase up really well. So we'll see. The thing with crypto is there's always a new game invented. And so like going back to my previous thing, there's always going to be a new game for sort of the hot ball of money to run to. And the problem is when the game gets too mature, it becomes impossible for sort of new entrants to do well. And so it naturally has a sort of short shelf life. In a lot of ways, it was like online poker where, online poker became big. Then there was too many guys who were just way too good, just too many sharks. And so people just went on to the next thing. Because it's not as fun anymore if you're just getting, destroyed constantly. So I think that's a similar sort of dynamic with this, with these like on-chain games. And I think Base is really well set up, and I think, and by virtue, I think Ethereum is really well set up. And I think you're probably right. I think AI is the next big thing. I think we're starting to see the early stages of it right now. I would suspect AI is going to be the main thing for the next cycle. I just think it's a little too early. But who knows? We'll see.
Yeah. Well, it's a pretty exciting area, that's for sure. And I can see it grabbing the zeitgeist big time this time around. And it will be interesting too, like, looking into the future. You follow the token terminal, or the truth terminal, on Twitter. Yeah. So token terminal AI agent with a Twitter account has been promoting a crypto called GOAT after it was financially emancipated by Mark Andreessen, who funded it with $50K of Bitcoin. So I just think like just saying that sentence is completely bananas. But it'll be interesting when the main character, there's that whole joke about like you don't want to be the main character of crypto Twitter. I think like we're very close to the main character of crypto Twitter not being a person, and they're just being like these AI agents that everyone follows. That almost feels like the ultimate manifestation of this, where it's like the biggest influence. The KOLs are all fake. Would be like the ultimate end game for all of this. Anyway,
it is interesting. I mean, I think it's still very early on that stuff, but I think you're totally right. I mean, the thing with AI, like to go to the GoatC thing, truth. It's kind of confusing. Truth Terminal, which is the AI Twitter account, and Goat is the coin.
Yeah.
It didn't actually create the coin, I believe. It just
No, it found it and started pumping it.
Yeah. So what's interesting about that is that's like the hardest working founder of a project you'll ever see. It tweets like, 100 times a day or whatever. Like it's just constantly like there is some advantages to having like an AI run your company, an AI CEO. It is, it is.
Well, if being a CEO is tweeting, then yes.
Yeah, I mean, in crypto, it seems to be.
I think there's a little more.
In the bull market, tweeting seems to be the most important.
It's one of the jobs, that's for sure.
Yeah, I mean, we'll see. I think should be good.
Posting is the job description for CEO.
Yeah,
should be good.
We'll see.
Yeah, it should be good or terrifying.
Yeah,
we'll see. All right, that's it for this week's episode of DeFi Decoded. Andrew, good to connect. Back next week with a guest. And again, if you're catching this live or close to live, do please check out the webinar. Will be in the show notes. We're hosting Chris Giancarlo, former chairman of the CFTC, and Perry-Ann Boring, head of the Digital Chamber, for a discussion on all things crypto 2025, Trump, what it means, and so forth. And if you're catching this many months from now, then you could probably find that webinar in the DeFi Decoded podcast stream. Until next week, that's it. I'm Alex. See you next time.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.